44% of Ethereum holders are holding their ETH at a loss. That is almost half of Ethereum holders. And Tether holds $72.5 billion worth of US Treasury bills. Wow, there is a whole lot to talk about. Let's go. Because this is what's trending today. Hey y'all, welcome back to Urban FinTech at the G-Spot Studios channel, where we try to make finance and technology sexy. I am your girl G. According to data from the market intelligence platform Into the Block, the percentage of ETH investors is at a loss, has grown sharply since early July. The relevant indicator here is the firm's historical in and out of the money, which tells us about the percentage of Ethereum investors in profits and losses and those that are just breaking even. Now, the metric determines whether an investor is in profit or loss by looking at their address history to check for the average price at which they acquired their coins. Now, naturally, if the asset's current spot price is less than a holder's cost basis, then that particular holder is carrying their coins at a net profit. This chart shows the in and out of the money based on the first three quarters in 21, 22, and 2023. And as you see, the black lines at the top where it's kind of a white fill, that is where most of the investors who invested in Ethereum are in the money. And as you see, in July of 2022 is when they started to get out of the money. And as of right now, that is still the case. And so 44%, almost half of Ethereum holders, will probably be holding for quite a while. Since the start of the bear market last year, the highest the metric's value has gone is 50%, implying that exactly half of the investors had been in losses back then. This value isn't too far off from the current one, suggesting that Ethereum may be close to forming a bottom, and we don't want to see that. If a similar loss percentage is hit with the bottom this time, ETH would first suffer from some more downtrend so that enough investors drop underwater. Not looking good. And as this chart indicates here, Ethereum has continued to move flat recently. And as of yesterday, it was about 1,600, right, and pretty flat. So it's looking pretty downhill. Not a good look. And considering that just in July, the percentage of folks that were out of the money was only 27%, that is a steep rise in folks who are out of the money. 44%, again, is crazy. Tether holds $72.5 billion in US Treasury bills. Now, is this a risky thing? And just as a refresher, the United States Treasuries are government debt instruments issued by the United States Department of Treasury to finance government spending in addition to taxation. Tether, the company behind prominent stablecoin USDT, holds $72.5 billion worth of these U.S. Treasury bills. This development was revealed initially in the company's assurance report from Q2 of 2023. Now, Tether's chief technology officer, Paolo Ordonez, on September 5th, emphasized this fact on social media platform X. According to Ordonez's post, Tether's $72.5 billion exposure to U.S. Treasury bills has enabled the stablecoin operator to emerge as the 22nd largest holder of these bonds, ahead of the nations such as United Arab Emirates, Mexico, Australia, and Spain. Now, in his post, the Tether CTO has applauded USDT's high utility in developing markets, referring to the stablecoin as a lifeline for many citizens and nations with insane inflation rates. Ordonez's post on X about Tether's investment has brought about negative and positive reactions from crypto enthusiasts. In particular, Matthew Dixon, the CEO of ETH, a crypto ratings platform, has expressed concerns over this development. Dixon states that Tether's news on its Treasury bills holdings is reassuring but still worrying. He states that the Tether USDT news is reassuring on the face of it and yet concerning. What if interest rates continue to rise, thus decreasing the value of these treasuries, and at the same time we have another black swan induced sell-off? This may pressure the dollar peg again. So, who is Matthew Dixon? He is the CEO of EVE, not sure how to pronounce it, but it is the world's first unbiased AI and ML driven crypto ratings platform. So, he's going to have a lot to say, and he's reviewing all 18,000 cryptocurrencies. Matthew Dixon has over 30 years of experience in the financial services sector and has worked for places like the World Bank and the FCA. EVE uses a rating classification system from A to U, A being excellent, B good, C being fair, D being weak, E being very weak, F as failed, and U as unrated. And along with this, they do an evaluation of the market index. And so they use a ranking system from A1 down to U. So each A, B, C, and D category have A1 through A3. A1 through A3 is a decreased level of risk with lower potential percent returns. B1 through B3 is moderate risk with the medium level of potential percent returns. C1 through C3 is a higher level of returns with higher levels of risk. And a D is higher levels of volatility with higher percent returns. And again, the U is unratable due to insufficient data. And I must admit, I like what they're doing over at eBay. I'm interested to see more. And as of September 5th, this is what Tether was trading at, just below $1. Now, y'all, do not shoot me in the comments, okay? Because I am really not here for Ethereum. It's just not one of those coins that I am excited about. I think there's something going on with that. And I think that, and this is my conspiracy theory, there could be a crash and Ethereum would be the ideal token to crash due to the amount of people that are building on that platform. And we all know that if you are into cryptocurrency, that there are only going to be a few in the end. And so to remove the seeds, the bad seeds, if you will, and Ethereum has a lot of great projects on it, don't get me wrong. And what it does as a platform is great as well. But I think in terms of kind of weeding out some of the seeds, it would almost make sense for Ethereum to fail or to have some issues around regulation. And that's just my theory. This is not financial advice. And in terms of Tether, after the Luna collapse, there were a lot of different things going on. People were scared. Investments were lost. The peg against the dollar just, honey, was gone. It was like, whoop, fall down. But I do have some high hopes in Tether and what it can do. I do think it's one of those underdogs that's going to kind of rise to the top. But again, this is all speculation. Nobody knows what's going to happen, but it is exciting to learn and talk about. So tell me what you think in the comments below. See you next time.